All right. Thank you.
You're welcome. Okay, go ahead.
Good evening. This is the Sweetwater Union High School District Audit Finance Subcommittee meeting, September 21st, 2020. We're starting at 4 o'clock and we'll start with a roll call and then a Pledge of Allegiance. So I will ask the committee members, I'll say your name and then you can answer, and then we'll have our guests introduce themselves. So first we have board member Arturo Solis. Present. Just say it. Thank you. Committee member Ben Gachowski.
Present and accounted for.
Thank you. Sorry. My computer isn't cooperating. Oh, committee member Jerome Torres. Jerome, are you present? Okay, well, let's move on. I see that he's here. I don't know if he can't unmute himself or what the issue is, but Dr. Sakeld, Dr. Aguirre, the district superintendent.
Here.
Nancy Picone. If you want to say present and state your title, that'd be great.
Present.
Thank you. Athena Quarles.
Present.
Daphne Enriquez.
Good evening, present.
George Williams.
Good evening, present. I'm the purchasing manager here at Sweetwater.
Thank you. I just need to keep going down this list. Elizabeth Reyes Velasquez.
She will not be attending Trustee Hall.
Okay. Janaea Quirk. Maybe they're not here. Vanessa Garcia.
Good afternoon, present, and I'm the payroll manager.
Thank you. All right, Dr. Sakeld, would you take over and introduce the guests, please?
Sure. Thank you, Trustee Hall. We also have District Staff Carolina Zimmerman who's helping facilitate.
Yes, I was going to do that after I realized I had omitted her, but that's fine. Thank you.
So we have our pro team, Mr. Kevin Smith, Elizabeth Shaw, and Kim Canuck, who will be presenting the 2018-19 audit, so they're in attendance today.
Thank you. I would ask everyone to mute yourself, please, if you're not speaking, because we can hear the background noise and it tends to be disruptive. Thank you. So right now we'll call for the public comment, if any. Carolina?
We do not have any public comment.
All right, thank you. So, Dr. Sakeld, it's you may start. Lead us off.
So, Trustee Hall, we have our CROW team in attendance. I know that many of us have been anxiously awaiting the 2018-19 audit. It has been an effort that is part of our fiscal recovery plan. A lot of work has gone into reviewing the details in terms of the balances that opened up the 2018-19 year. The team will highlight several restatements and some of the work that our district management have done to address some of that, as well as the overall financial picture for that period of time, and along with our bond performance audit for that respective year and our bond financial audit. So I think at this point I'd like to transition to Mr. Kevin Smith to provide background and details on the draft report.
Thank you, Dr. Sockel. Versus having a PowerPoint presentation or a couple of slides to go through, I really wanted to turn this more into a working session. We're going to actually go through the documents or the drafts, particularly the financial statements, which include several of the deliverables. But first and foremost, I want to give you kind of a status of where the audit is. We're in the final stages, wrapping it up, clearing review notes, national office reviewing it. One of the final steps is review and approval by this committee, and then ultimately going to the board next week. So we are actually in that final throes of issuing a set of financial statements. But a draft has been provided to you, and we're confident that although that draft may have minor wordsmithing changes, either coming from this committee as well as management or even our national office, we believe that there will be no substantive changes between this and the final report. We've conducted our audit in accordance with generally accepted auditing standards promulgated by the AICPA, as well as those promulgated by the GAO, or the Government Accountability Office. So both generally accepted auditing standards as well as government auditing standards. We performed that audit in accordance with those standards, but as a reminder, that does not alleviate those charged with governance or this committee or management ultimately for the responsibility for the fair presentation of the financial statements. We are going to be prepared to issue our opinion. It will be an unmodified opinion, which is the highest level of assurance that we can provide, and it really means that two things. One, the financial statements are prepared in accordance with GAAP or those promulgated by the Governmental Accounting Standards Board, as well as that it's supported by the underlying books and records of the system. But we'll go and we'll spend some significant discussion time tonight talking about what does that mean by being supported by the underlying books and records of the system, as well as some control deficiencies that were denoted throughout the engagement. Excuse me. As a reminder, the other deliverables that we were engaged to perform, we have performed a financial statement audit of the the Proposition O bond program. We will also be issuing an unmodified opinion there. We have been engaged to do a performance audit around the controls and objectives surrounding the Proposition O bonds. Sorry, my tongue's getting twisted here. I believe there were 5 objectives there. We had a modified conclusion on 1 objective. 5 items were tested. This relates to conclusion of minority participation within the contract. 4 of the items selected had evidence of said inclusion within the contract. The 5th item, we could not verify evidence as to whether that had occurred or not, so we're calling that out within our report. The other 4 objectives were tested without exception. We also performed a single audit, or an audit in accordance with an audit related to your federal grant funds. We're issuing an unmodified opinion there as well, with no deficiencies or no compliance problems noted. Anytime you receive federal funds greater than $750,000, in this case the school district receives approximately $38 million, we're required to test major programs and determine compliance with those programs. Our test work did not note any areas of material non-compliance within that program. So that leaves the 4th and primary objective, and why we're all here tonight, the audit of the financial statements. Elizabeth, if you could pull up a draft or the draft of the financial statements. We'll go through these at a very high level, but I want to point out a couple of matters that I think, as you said on the audit committee, I think is worthy of pointing out. First and foremost, on our opinion, As it says here, and I indicated earlier, we will be issuing an unmodified opinion upon the government-wide financial statements, i.e. the full accrual, kind of a consolidated look at the district, as well as on each of the opinion units or major funds within the district. That opinion is unmodified. However, we have included 2 paragraphs within our opinion here on page 2 that the auditing standards would refer to as an emphasis of matter. These are items that do not impact our opinion, as you can see in the last sentence of each of those paragraphs, but we believe are important enough that warrant the specific attention of a reader. So this is our effort within our opinion to say, reader, this is of enough importance that you really need to pay attention. First and foremost is the concept of a going concern. We do look at that as part of the, well, management is required to assess it as part of generally accepted accounting principles, as well as we are required to look at it from an auditing perspective. First and foremost, I would say that there is a difference between going concern in a commercial entity versus a governmental entity. We all recognize that
is
there
now
would be
joining.
a long road to actual, by definition, 1, there would be no liquidation of the school district, and 2, the school board would have to deem itself to be financially unable to continue and ask for the state's help. This is not in any reflection referring to that. It is about the district's ability to continue to pay for debt, pay for obligations, etc., through the ordinary course of business, through funds that it either has or has secured through the normal borrowing process. Our primary concern here, and again, there's a difference between what common sense might tell you as well as what the auditing standards requires. The real key kind of trip from a going concern perspective as it relates to our auditing opinion is the borrowings from San Diego County. Those aren't formalized. They could, in theory, stop at any point in time. They're not evidenced by a note payable that will extend out over the course of the next 12 months. Management believes, and quite frankly, I see no reason why it would not continue to occur, but under the auditing standards, that in itself is enough of a reason to conclude this emphasis of matter for a going concern. The second item that we've noted in our opinion is the restatement. So this is kind of that line in the sand where management as well as Crow has determined that there were errors within previously published financial statements as of June 30th, 18, and we have gone back and changed the beginning net assets or fund balance to reflect the proper amount. So it's kind of a line in the sand and saying going forward, we believe the information is accurate and an unmodified opinion has been reached. At a high level, that is our opinion. It does cover the financial statements, and very quickly we'll kind of go through certain areas for you to pay attention to as you go through the financial statements. First and foremost, there is a management's discussion and analysis. I encourage each of you to read this section. It's a 4 or 5 page document. Really more in a layman's terminology, but it's designed to assist the reader in understanding what the financial statements are telling them. It's really management's one place that they can go to try to put a perspective upon the financial statements, although there are certain requirements both from the positive and a negative that can be included. The information does matriculate back to the financial statements, but it's in a condensed form, allowing the reader to make high-level analysis of the financial statements. The first set of financial statements is the government-wide. And again, I referred to this kind of as a holistic, consolidated look at the district's financial statements. This includes items that, as a audit committee member, or more importantly, as a board trustee, really may not have any impact upon a annual budget process, because it's all of the funds put together, as well as bringing in a variety of long-term assets and liabilities. For example, here you see the non-depreciable capital assets and the depreciable capital assets. These are the campuses, the buildings, headquarters, etc., but everything that has been included or incurred to date, as well as the impact of depreciation. It also has a variety of things called deferred outflows of resources as well as deferred inflows of resources. These are really things that require recognition on the balance sheet but do not meet the definition of an asset or a liability. It's not, for lack of better words, the wild, wild west when I say it hadn't met the definition of an asset or a liability. GAAP, or generally accepted accounting principles, has specified what items can and should go within the deferred outflows of resources. You also have your accounts payable, your unearned revenue, as well as long-term liabilities. And again, this is where I say it's not a focal point of an annual budgeting process, because as you see, you have $1.3 billion in liabilities that are to be paid out over the course of the next 1 to 50 years, depending upon the nature of the liability. Finally, ultimately arriving in a net position. Really looking at the net position over time is the best way to evaluate kind of the long-term fiscal health of the district. Although a point in time provides some information to a reader, I would highly encourage you to think of this as what does it say about the district if you look at it in a 5 and a 10-year increment. As you can see, there are 3 areas that we're required to look at or to classify. The net investment in capital assets is just that. It's your long-term assets, less the related debt that was incurred to build those assets. Also, you have 3 restricted line items. These are where somebody external to the district, legislation, bond offer or bond holdings, trustees, the state, federal, someone has placed a restriction on the ability to spend these net assets. And ultimately, the negative unrestricted number. This is again where I would encourage you to look at these from a course of a 5 and a 10-year window. I would tell you that your peers also typically have an unrestricted net position here, and it's primarily related to 2 big things. It's the net other post-employment benefit obligation, as well as the net pension liability associated with both CalSTRS and CalPERS. So you've reflected your share of that liability with limited funding source or limited funding assets on your balance sheet towards that. And we'll get back into some of the reconciliations, and you can see just how much of that $623 million is made up of those amounts. The income statement for the government-wide really reflects kind of the cost of providing instruction, pupil services, general admission. It starts with your expenses. It identifies any of the revenues that are restricted to those purposes, and then comes down to a kind of a net number of the $500 million or $503 million. This is kind of what then the taxpayers, as well as the federal and the state, not restricted to specific purposes, has to try to make up for that difference, ultimately arriving in a change in net position. One key item to point out, we say net position July 1, previously stated. That's an indicator to the fact that there has been a restatement embedded within the set of the financial statements, and it's alerting the reader that they can go to note 13 for more information related to that restatement. The next set of financial statements, I think, really are more in line with how the district manages itself, as well as how audit committee members and trustees are most likely to think of how they have led the district throughout the course of the past year. It is broken into columns by a concept called major funds, which is both a qualitative and quantitative assessment. But as you can see, this includes your general fund, your building fund, special reserve for capital outlay fund, capital projects for blending component units or the Mellorews, and then all other non-major funds consolidated into a single column to arrive at a total. It's important to note that our opinion, as well as the auditing procedures that underlie that opinion, happen at each one of these major fund column levels. So we design our procedures to assess materiality both from a qualitative and a quantitative standpoint on each one of these individual columns. The next schedule is a reconciliation between the government-wide balance sheet and the fund level balance sheet. I said it brought in all of the long-term liabilities and long-term assets. Very first line item is the net capital assets of $989 million. Then it goes into the long-term liabilities. And as you can see, the net pension liability of $551 million, plus the total OPEB liability of $166 billion, or excuse me, million with an M, really is what took your negative net assets or unrestricted net assets to a negative amount. And then the remaining items from a long-term nature as well. The next statement is your statement of revenues and expenditures and changes in fund balance. It walks forward your balance sheet item. At the top, you have your revenues, both local control formula or the LCF, both from a state as well as local sources. Then a variety of federal sources, other state and other local. Ultimately, combining to total revenues, and then it is the expenditures by functional classification, certificated salaries, classified salaries, etc., down to ultimately the net change in fund balance. One key number here that I think that the trustees as well as management and the audit committee can be pleased with, I'd really focus your attention to that 6.9 million. Excuse me, change in fund balance of the general fund. This is a tremendous story, lots of efforts, whether it be the early retirement as well as a variety of other things that management has taken into play. And it started to change that fund balance narrative that you would have seen in fiscal year 18, as well as kind of the overall financial stability of the district. So it's a good story, but I deem it to be, you know, for lack of better words, you're still in the beginning of the book versus the last chapter. The book has gotten longer with COVID-19 and the impact that it has had on the state as well as the district, but really kind of a good news story as it relates to fiscal year 19 and the amount of progress you made towards correcting kind of that negative fund balance that we've seen in years past. The following schedule is a reconciliation between the government-wide income statement as well as the fund level. Certain things have an impact on the government-wide that don't have an impact upon the fund level and vice versa. Finally, one more set of small financial statements that address your agency funds as well as your scholarship trust fund. Obviously, again, we focus a materiality concept here as well and would have focused in the area of cash on hand and in banks as it relates to the agency funds. But again, materiality would have been assessed on this 4.2 million versus an overarching materiality as applied to the district. So long story, when you see that, or try to tell a long story shorter, when you see our opinion and it relates to each of the major funds, really think that our materiality and our test work is driven by the numbers in the column versus the total columns. Finally, it gets into the footnotes, which are an integral part of the financial statements. Very high level, I'd point you to note 1. This identifies all of the summary of significant accounting policies, whether it be the reporting entity, component units, estimates embedded within the financial statements, how they account for a variety of things that you see on both the balance sheet and the income statement. The remaining of the footnotes really spend a lot of time fleshing out larger numbers on the balance sheet or income statement and providing greater detail for them. That could include the OPEB, the net pension liability, capital assets, as well as debt. All very important, and I would encourage each of you to spend some time with them, but really where I want to drive our attention today would be footnotes 12. Thank you, Elizabeth. You read my mind even before I could think of it. Note 4, capital assets. We're going to get back into the restatements here in a little bit, and a significant amount of the restatements are embedded within this table. As you see in the first column, balance July 1, 2018 is restated. The amount or the net number of 1 billion or 1,002,474,952, that was changed by about 10 million between now and the previous year. But more importantly, though, you would see significant variances between the work in progress and the building and improvements. So it was kind of an inability by previous management due to, the only thing I can speak to is I can recognize a lack of system controls embedded within your IT system, but there appeared to be a significant lack of ability to move things out, once completed, out of work in progress to depreciable asset. Thank you for stopping for me, Elizabeth. This note relates to your long-term obligations. Again, very critical, but very consistent with previous years. There was, again, as we'll get back in the back, some information that was restated as it relates to long-term debt as well. A portion of that related to some premiums, some deferred inflows and deferred outflows. Again, that was probably a little bit more technical in nature versus an accounting system related, but the amounts were relatively immaterial. But once the financial statements were open for restatement, we booked that to be appropriate from prior year. Really, where I would ask the members to now spend a significant amount of their focus as they're reviewing the financial statements would be beginning with footnote 12. So these are kind of the additions to an ordinary school district that is, kind of going on as business as usual. First and foremost is note 12, back again to that kind of concept of going concern. This talks about all of the issues that gave rise to Arkin management's concern or their analysis as well as ours. It also highlights both negative factors and positive factors, as well as steps that management has taken, as well as that management intends to take. And as you read the financial, or as you read this disclosure, you'll see that based upon management's beliefs and plans going forward, they believe at a certain point that they will have corrected this ship. Now, a certain amount of cautionary wind by the time that we have issued these financial statements is the impact of COVID-19 and its impact upon state funding, as well as the deferrals there and the point in time of fund balance in any given fiscal year on a go-forward basis. The next footnote, footnote 13, goes through each of the restatements that we identified in the course of our audit. I would highlight that some of these financial statements or some of these restatements were identified by management, as they have done a tremendous job in the current fiscal year of implementing internal controls to mitigate the impacts of a less than desirable IT system or general ledger package. Many of these controls were not in place throughout the fiscal year. Really kind of, if I pinpointed, I'd say beginning in January was when most of the controls were put in place and began functioning and operating effectively. So we had a course of 6 months that those controls were not operating. I'd say that management has done a tremendous job, and in many ways, though, I'd also kind of caution it and say, for lack of better words, these internal controls that have put in place are basic blocking and tackling. And that's why it was absolutely so critical for management to put them in place. One of the key aspects of an internal control structure for an LEA, or for that matter, any entity, is a monthly or even more periodic than monthly, depending upon your system, reconciliation of balance sheet accounts. That's accounts payable, it's accounts receivable, it's cash, and really reconciling that back into the subsidiary ledgers. That had not occurred in previous years, or to a precision level appropriate, and there were reconciling items being carried from numerous years back. Those entries were either identified by management or by Crow throughout the audit process, and they really give rise to many of these numbers that we'll go through in note 13. But as you can see, we've broken the footnote down by, again, kind of for lack of better words, the column. The first focus is your general fund. And previously, back in FY 18, you had indicated there was a $7.2 million negative fund balance. We believe that 6.1 was the appropriate amount. And really, as you can see, it kind of related to three primary areas. You did, in fact, owe another fund more money, so that reduced the negative fund balance even more. However, there was approximately $2.1 million in accounts payable that just didn't exist as of June 30th, 2018. So those amounts were brought back into fund balance to arrive at a negative 6.1 at the beginning of this fiscal year. The remaining columns, or the remaining section of this, goes by, again, each of those columns. This one, fairly simple. This is the fund that the general fund owed more money to. The adult education fund had a problem with AP as well. And then some really large numbers, but again, in the government-wide, this is the capital assets as well as the debt that Elizabeth showed you within the footnotes. Ultimately, about between a $9 and a $10 million adjustment, improving your net position. But as you can see, really numbers going in a variety of different ways. The two largest being that move from the overstatement of work in progress. You had $123 million of projects that were, according to your financial statements, still in progress, but were actually in use and by the district and should have been being depreciated of about $165 million. Again, I'd say kind of a couple key points, particularly as it relates to these large items. It did not involve overpayments or cash disbursements. This was a blocking and tackling and really a focus upon good sound numbers within the capital asset subsidiary ledger. Our next footnote is kind of just an alert to a reader. Obviously, most readers are fully aware of it, but the impact, the COVID-19 impact. If you think this might be a little short, based upon your knowledge of what COVID-19 has done to all of us, keep in mind a couple things. One, it's really related to the impact that it's had upon the financial statements, and much of that discussion has really been driven into that going concern footnote and footnote 12. Note 15, because we are issuing the financial statements so much later, we have included a subsequent events, and it's really just trying to provide the reader any significant facts that they should evaluate based upon anything that has occurred since the year end that could have an impact upon how they view the district's financial statements. Those are the footnotes. You also include what we deem to be required supplementary information. This includes both budget to actual information, as well as a variety of schedules as it relates to both of your pensions at CalSTRS and CalPERS, as well as the OPEB plans. You also have supplementary information. I referred to the one fund that was kind of, or the one column that was a total of a variety of other funds. This is where if a certain fund, whether it be adult education or cafeteria, if you had a particular interest here, you can come back to this combining schedule and see both the financial position as well as the results of its operations here. Very quickly, we're going to get to some other really key information, I believe. Keep going. Variety of, this is your schedule of federal awards. Again, this is that single audit that I referred to. The next page, or within this section, we will also have our independent auditors report. Again, the draft, as well as our intention, is an unmodified opinion upon compliance, nor did we have any internal control weaknesses as it relates to compliance with said federal funds. This is where I was going to take you a little bit closer. This is not the restatement. This is walking through what had previously been published, or your unaudited actuals as of June 30th, 2019, to what is now ultimately being displayed within your financial statements. So for example, The unaudited had a negative 1.4 million. For the unaudited, we now reflect that as a positive of 818,000. Obviously a good story, but when you think of the required amount of reserves as well as management's intentions, still a long way to go. So cautiously optimistic, but very pleased with the progress that the district has made in this current year. It walks forward each of those funds, again showing the difference between what has previously been reported and what has been published now. This one's a large number, so I just want to spend just a little bit of time here. Fund balance of 7.5, ultimately going to 13.4. This is really a timing difference. So this was a reversal accrual of funds that were not in fact expended as of fiscal year end, but were expended very shortly thereafter. So it has an impact upon fund balance as previously reported within the unaudited actuals, but not something that one can say, okay, now we found 5.8 million, where do we go spend it? In fact, it got spent very quickly after year end. It just didn't belong in fiscal year 19. Small adjustment to the capital projects as well as the Delta Education Fund, but again, a required disclosure that just walks forward what's previously been published as part of the unaudited actuals to the amounts that have been included within the financial statements. Our audit is really focused upon the financial statements, but one of the things, and again, my comment earlier about being able to look at kind of 10-year trend information, this is an area within your financial statements, so you don't have to pull 10 sets of financial statements, but you can really go back and look at at what has happened to the district over the course of time in a variety of selected key financial measures. Our audit, keep going, Elizabeth. Oh, I'm sorry. Thank you. We're also, as part of the California K through 12 audit guide, we're required to perform certain procedures over compliance with state laws and regulations. For example, over attendance, teacher certifications, etc. And as you can see below, the procedures below, whether the procedures were performed and the result of those procedures. In our opinion, the district complied in all material respects with the compliance requirements as set forth in the K through 12 audit guide. Our audit is designed to test the financial statement numbers. It's not designed to provide an opinion upon the internal control structure of the district, but we do test the internal control of all our clients to determine the nature of both the risk the impact it has upon our risk assessment, as well as the substantive procedures ultimately required to issue an opinion. In conducting our audit in accordance with generally accepted or within government auditing standards, this is a byproduct report, but this is where we communicate to those charged with governance what we found with respect to internal control over financial reporting. Very key document, and I'm not going to read everything to you for that, but I want to point out just a couple of key definitions. So a deficiency is in internal control exists when the design or operation of a control does not allow management or employees in the normal course of performing their assigned functions to prevent, detect, and correct misstatements on a timely basis. So anytime we have any type of exception, whether it be a financial statement number is wrong or within our control test work, if something goes wrong, we consider it to be a deficiency. But then auditing standards require us to think of those, and we're required to communicate to those charged with governance 2 levels of deficiencies, greater than just a deficiency. First, and and it's the worst, is a material weakness is a deficiency or a combination of deficiencies in internal control such that there is a reasonable possibility that a material misstatement of the entity's financial statements will not be prevented or detected or corrected on a timely basis. So this moves beyond just a deficiency to, hey, there's the internal controls do not operate at a level that there is a reasonable possibility that a material, so a qualitative and quantitative material misstatement could occur. The second level is a significant deficiency, which is a deficiency or combination of deficiencies in internal control that is less than severe, yet important enough to merit attention by those charged with governance or this committee. So if you think about it, from the worst, you have material weakness, you have significant deficiency, and then you just have deficiencies. We have reported 7 matters to the district, all included within this letter. I had it memorized earlier. We'll just go through them one by one. But so first and foremost, there are 3 material weaknesses. So this is an area of focal point, I think, for management as well as for the audit committee as they assess management's progress over the course of the next 12 months. Some of them will be addressed through the implementation of a new IT system. Clearly, there are deficiencies as it relates to that system, but management is accurate in their beliefs that they can't wait on the IT system. They had to implement or strengthen internal controls, again, back to that kind of concept of reconciling the balance sheet, the income statement, etc. They've got to continue to do that, cross-train their people, as well as continue to develop written documented policies and procedures. There were 2 other deficiencies, 2019-004 and 005, that we've considered to be significant deficiencies, and 2 that are included within this document that are merely deficiencies. Won't read each one of them to you because you're probably already tired of hearing me as well as the twang that I have from in my voice, but we'll go through kind of one by one. First and foremost, material weaknesses as it relates to the fiscal stability. Again, management has done a tremendous job in year 1 of righting the fiscal stability ship, but there is still significant work to do. And the hard news is, and this is somewhat now systemic across you as well as your peer organizations, righting this ship just is going to be that much more difficult in this post-COVID or in this COVID-19 world. So each of these findings, we talk criteria, condition, cause, effect, fiscal impact, as well as our recommendation. And just as importantly, that last section, views of responsible officials, as well as their planned corrective action plan. We also had a material weakness over financial reporting. This is, again, kind of that concept that I was talking about earlier, really focusing upon cash and bank, county treasurer, AP, AR, and ensuring that those reconciliations are occurring on a timely basis. One key point to make as it spells out within this finding, the results or the net numbers of the adjustments were referred to in 2 separate sections earlier. But really what you see here is just how many entries that were made up of. Over 48 individual audit adjustments in cash and bank. Again, timely reconciliation or disposition of reconciling items, as well as 20 specific audit adjustments, whether it be an AR and AP. This is an area where management has made progress, and I would say that many of the entries they identified, many we identified, but it's one that I do have confidence that management is addressing now, and I believe will be that we'll have a better story to tell when we come back in next January with the 2020 audit. The third material weakness, this is related to those entries that you saw within capital assets and long-term liabilities. Again, the current system doesn't really have a subledger within TrueCourse. Items are maintained within an Excel spreadsheet. Those controls around that Excel spreadsheet over the course of numerous years appeared to have been lax based upon the results of a very in-depth analysis performed by management and audited by Crow. Item 4 is we've now dropped below material weakness, and this would fall into that significant deficiency bucket. Again, this is that calculation of interest charges between other funds. Just as importantly as the inaccuracy of the interest that was charged, the reliance upon that borrowing and the extension over greater than 120 days is absolutely critical as well. So this again relates to the borrowings from the capital project or the Melrose, or what is referred to as the capital projects for blended component units and the general fund and the related interest charges associated. Item 5. Related to some internal controls as it relates to the salaried employee payroll, inability to monitor registers prior to uploading to the SD or to the San Diego County of Education system, as well as just a few other controls embedded within a true course and the ability to monitor that. We noted no findings as it relates to that. You see that within the fiscal impact, but we did deem it to be a significant deficiency. And again, in each one of our findings, I pay particular attention to management's planned corrective action and their view upon the system. Just as a deficiency, we noted some errors in the initial preparation of the schedule of expenditures of federal awards. Cumulative amount was $717,000. They were properly spent. Compliance was, we had no issues with compliance, but again, kind of that reconciliation and the overall generation of that schedule, we noted errors in draft 1 compared to the amounts that are reported to you now. And our final finding was a control as it relates to the associated student body accounts. So again, we noted at one location, Palomar, yeah, we discovered the school did not follow a formal approval process for holding fundraisers. They were approved informally rather than using the correct form that the district has in place. Again, our audit was not designed to identify all material weaknesses and significant deficiencies, but I will tell you this is a comprehensive list, and anytime it's, you kind of have one over financial stability, one over financial reporting, including reconciliations, it's about as scathing of a report card as an auditor can give. But I would say that I caveat that or have some cautious optimism based upon our interactions with current management, the steps that they had already taken in place prior to our audit, as well as their responses to other recommendations that we've made, etc. I do believe that it's one that this can be corrected and will be corrected by the team that you have in place. So again, like I said, it's pretty scathing, but I'm cautiously optimistic based upon my interactions with management. I believe you have a good team, and they're dealing with past issues as well as a very, we'll just call it non-robust IT system. That is the end of my prepared remarks. I'm happy to try to answer any questions, and if they get too hard, I will ask Elizabeth and Tim to answer as well.
Thank you, Mr. Smith. We appreciate that. Dr. Sawkill, do you have any comments before we ask for questions from our committee members?
No, Trustee Hall. I think Mr. Smith covered quite a bit of the work that the team has collectively been doing.
You're kind of fading in and out. I don't know what's going on, but I'll move to the committee members and ask them for questions now. Mr. Torres, I see you've appeared. Would you like to start?
If I may, can you guys hear me? Okay, perfect.
Yes.
Well, first, I want to commend
Yes.
Pro, because I've read quite a few audited financial statements in my 30 years of government. And I have to say, this is probably one of the most forthright audited financial statements I've ever read. And in particular, I'm referring to Section 2, Financial Statement Findings and Status of Prior Year, Findings and Recommendation. I had never, in all my years, read something that explicit as with regard to the evaluation of a public agency's finances. And so I want to commend you with that, okay? I do have only 3 questions. One is rather technical. And that is, and you referred to it, if we can go to note 13, I don't know if you have the PDF agenda packet or just simply your financial statement, but on note 13, it would be on our agenda packets, page 76, and in the audit, it would be page 64. And you had referred to it because of my particular concern, like you were saying, I actually went through the whole thing with a fine-tooth comb, okay? And I, no doubt, as will be the general public, had a particular interest on the general fund. And the first notation that was on page 21, which is the change in fund balances, as you noted earlier, it went from a negative, originally stated, of 7.2 million to a positive 6.9. And that had to do a lot with the restatement noted on note 13. And this was the question I was going to ask, and you kind of talked about it, but it had to do with the entry, reduction in accounts payable due to proper account reconciliation process, the $2.2 million. And basically, your assertion was the bottom line is that these accounts payables did not exist. Okay, they were for an entry that you, for whatever reason, they could not be traced to either a contract or a purchase order or a requisition. They just didn't exist.
Mr. Torres, and Elizabeth, please jump in and correct me. I misspoke slightly there, Mr.
Okay,
Torres.
please.
The way you've described what I said is accurate for many of the adjustments. There is another or a portion of that adjustment, which I can't remember the exact number, and Elizabeth probably knows it by heart, that related to a capital lease. So a true payable. Well, a true, how do I want to say this? A true obligation, but it is a payable of the government-wide. It is not a payable of the general fund until it is due and payable. So although it was to be paid in July or August, it should not have been reflected as a payable as of June 30th, 19 for the general fund. Kind of a gap nuance, but it was accounted for elsewhere and they ended up double counting it, if you will.
Okay, and I would assume that the adjustment to recognize principal payment on capital lease agreement in proper period, the 721,000 debit is that what you're talking, the double count?
No, that's a different one. So
Okay.
There was 2 different lease payments. The 721 was a capital lease that was actually technically entered into in 1718,
Okay.
but the prior audit and the prior close didn't include it. It was actually recognized in 1819 inappropriately. So we were shifting it back to the 1718 period.
Gotcha.
And then the payment that Kevin was mentioning, 1.36 million of a lease payment, that was actually accrued for inappropriately because it technically wasn't due at that 1819 period. It was technically due at 1718. So we were moving it back, and then it was accruing it inappropriately. Okay, I'm getting a little bit in the weeds, but okay, but it was accruing it, and it was basically being double counted in the long-term liabilities portion.
Gotcha.
So it was throwing things off. But it was something that existed. It was just an accounting nuance, the way it was recognized.
Got you. So this is my suggestion, since this is a draft audit. My suggestion would be that for this entry, the $2.2 million, okay, is that you provide a footnote that explains how you came to that number, okay? Because when I was going through the financials, I actually had to do some cross-referencing and getting out my calculator. Among the 3 pages that it referenced to see how, and back it in. How did you guys come to the $818,000 net fund balance after all these entries? So I had to do a little calculation, but that specific entry, I would strongly advise you guys to put a footnote explaining what that is, because that $2.2 million makes a tremendous difference from going from a negative to a positive. And without the proper explanation, people are going to be suspicious. I can guarantee you, okay? Because a lot of people are going, like you said, Mr. Kevin, a lot of people aren't going to look through the audited statement and really grill down. They're going to go and focus on the general fund, because that's where a lot of the problems historically have been. So that's suggestion 1. The other suggestion, and please excuse me, maybe in my words or in my tone, has to do with note 12, going concern. Okay, I'm going to read to you so that way I don't misstate myself. 1, who wrote the narrative for that note? Was that between Crow and management, or did Crow write the note entirely? And the reason why I'm asking that question is that in the note, and I read through it, in depth, in the note, there's no mention of the statutorily required reserve or other issues noted in the unaudited schedule, which is page 84 of the audit, page 99 of our agenda packet, and or conformance with section 2, the financial statement findings. A lot of the language, especially in the schedule, and a lot of the language in section 2, the financial statement findings, you don't see a corresponding narrative in note 13. For me, and I'll just tell you, for me as an outsider, it kind of read almost like a PR piece, trying to make the school district presented in a much positive light, and understandably so. I mean, Dr. Selkeld and her team have done tremendous work. But the bottom line is that it came off to me as a reader more of a PR piece, and it didn't really go into the substance of especially section 2. Because when you read the section 2, that's where you get an unapologetic review of the practices of the school district. And I didn't see that corresponding language in note 12. And I would suggest you got whoever wrote it, that they may want to address some of that, especially with regard, as I said, for us wonks, there's no reference to the unaudited schedule, which is page 99 in our packet, page 84 in the audit statement. There's no corresponding discussion about those key pivotal notations in that schedule under note 12, okay? So again, something to think about. Now, the last question really has to do with staff, and actually staff and the auditor. And again, I want to applaud everybody for all the work that you guys have done to try to get this ship right, okay? Because God only knows it was a mess. But the one thing that kind of perplexed me, and again, looking at it through my lens, is that I couldn't understand why in the MD&A, which is written by staff, in response to the audit findings, why, and then also in corresponding note 14, why there was so much discussion about the COVID-related funding, the CARES Act, because that's a prospective issue. This audit is about 1819, and there's no CARES Funding Act involved. Okay, has no bearing whatsoever on the financial condition of the district in 1819. Yes, in 2021, 22, absolutely. Even 1920, yes. But in 1819, there has absolutely no relevance to any of the financial information. And I couldn't understand why the emphasis on funding or an event that didn't take place in 1819. Maybe if somebody could explain that to me.
I can take a stab, and it looks like Dr. Sockeld wants to as well. So, but I'll take the first stab. First and foremost, 3 great points, and thank you for reading as closely and providing your commentary. Duly noted on either the footnote or another possible solution would be creation of a couple more line items on the AP restatement. So duly noted. Second, I think we will obviously we will work with management, go back and really try to hash out the going concern comment to a greater degree, because the PR piece is the last thing that we want. But third, to answer more of your technical question, and I'll deal with them one at a time, within the MD&A, my comment was it's kind of management's opportunity to describe their financial statements and how the reader should look at it. One of the required elements, so there's like 7 or 8 required elements within GASB 34. One of them is currently known facts and conditions. So it's a step, at the time of this issuance, these are the things that we know about. So the example always given is, what is a known fact or condition if there was a plant in your community that was your biggest property taxpayer and it was threatening to leave? That's not a currently known fact or condition. But if it has left since you issued those financial statements and it's going to have a significant impact upon you, that's something you need to alert the reader to. So in that currently known facts and conditions, and again, this is kind of for lack of better words, the quagmire we find ourselves in issuing in October, a year late. We've got this global pandemic to deal with and try to figure out how to describe that currently known fact. You shift to the footnotes, and anytime you have a going concern, it really then becomes, are we going to make it through? And that then becomes about projections, and that's when COVID-19 gets pulled in as well. So I very much appreciate it. It's not June 30, 2019, but that's why COVID-19 plays such a big role in both those 2 places.
Yeah, maybe my suggestion, if I could, is again maybe a recontextualization of that narrative, okay? Because again, any reader, reporter, whoever picks this up, and they're going to go, "What are you talking about? The CARES Act funding didn't exist. Why the emphasis on something prospective that doesn't have any financial bearing on the figures that we're looking at?" So maybe recontextualize that on a narrative basis. But now that you've explained it, I got it. But other than that, I think the audit was really well done, especially those 2 sections. I thought that really brought some gravitas to your work, because I think, but then again, it's all way in the back, right? It's on the way in the back of the audit, and that's unless you're a policy wonk or a financial wonk like we all are, right? For the most part, you don't go to that, right? You're going to go right straight to the notes. So that's the reason why I said what I did about the notes, is bring a lot of that to the notes. You stuck your neck out as an auditor. You really did. With your client, you stuck your neck out and say, "Hey, look, this is the real deal. This is what we saw." Well, then put it in the notes. Be more informative to the general public. Other than that, great job.
Thank you.
Thank you, Mr. Torres. Appreciate your comments and your questions. Mr. Gutowski, do you have any questions?
Comment and then kind of a statement to the board. But I want to say to the CROW team, I'm very well pleased with the comprehensiveness of the audit report. It was very in-depth and very insightful. I agree with you that being cautiously optimistic is a very good statement. I think some of that is, in light of the COVID-19. I am very well pleased with the response from the district and Dr. Salkeld and your team. Some of the major findings are being dealt with, and then some of the minor ones as well you started work on, such as the compensated absences and then bringing down vacation balances is an example of that. So there's an overall response that addresses the main factors and then also the little minutia as well. It did surface one comment that I ended up having, and then I knew the board has a 2-term limit for basically board members, but however, there's the medical benefit that was for 12 years of service. The board should re-look at that policy, and my recommendation would be that it would be prorated or scaled if they were to continue it, if not, or discontinue it due to the economic uncertainty. So anyways, hats off to CROW, and then hats off to the district for your hard work.
Thank you, Mr. Gutowski. We appreciate your comments. I agree wholeheartedly with your observations, and Mr. Torres. We're well pleased, I believe, with the thoroughness and the depth that the audit went. I'm glad that we were extended, the extensions were approved, so this work could be as thorough as it was. Mr. Solis, do you have any questions or comments?
No real questions. It was answered. I wanted to get a little clarity on that $2 million, but that was already covered. So thank you for that, and thank you for all the work.
Thank you. Is Dr. Aguirre, would you like to make any comments or have any input on this at this time?
I want to echo some of the comments that have been said already. I think there's been a very thorough process, and there's been a very strong engagement on behalf of our staff and the auditors to make sure we get this right. And ultimately, this audit tells a story of financial recovery and how we are on a process. We don't flip the switch and go from being on to being off. We're not going to go from one to the other. It's a process of recovery, and this process includes multiple layers to it. It includes the platforms that we use that are so outdated, the technology pieces, but it also includes the behavioral pieces that finance has been working on and the new steps and checks and balances. So again, for me, my takeaway is that this continues our process of recovery in order to ensure that our district is in a place where we have that stability of financial operations and just overall across the district. That's what this audit tells me, is that this is an opportunity for us to continue that recovery process. Thank you.
I also echo those remarks, and Mr. Smith and your team, Mr. Kennup and Ms. Sav, I think you've done a really tremendous amount of work. Our staff has done a tremendous amount of work, yes, but they have. I think really we saw a change initiated in 2018. As you stated, it really started to come into real steps and policies and procedures and processes in January of 2019 and continues to this day. And as we look at this audit, there is a lot of clarity in it, a lot of real intense and good and information that well serves us on what the issues are and were, and how we are continuing to monitor and work to make progress, to make sure that we don't go back to the time before 2000 or January of 2019. So I believe that we all understand this is a valid, it's thorough, and it gives a clear picture of where we stand. I know you will take in the comments of our community members when you finalize this report to bring it to the board next week. So I want to thank you all for your time, and I know you're going to hang around and go through the next two pieces and then the engagement. So I just wanted to say we really appreciate, because as Mr. Torres said, you really did stick your neck out. You did a lot to make sure that you could stand because of the confidence you had in what you were seeing, our leadership, Dr. Sockeld and the team, what the work they were doing in that 2018-19 year. So I know that you could see the value in it, and that they were really bringing some clear, doing a good amount of work to push us forward and to get us in a recovery position. So I want to thank you for standing with us and getting your senior management in agreement with you on that. So we appreciate you all. And I'll go to the next item on our agenda, which is the Propo. Yes.
If I could just have a few seconds.
Yes.
One, thank you for the kind words. I'd be remiss if I didn't just say how great Elizabeth and Tim, the work that they've done, but just as importantly, if not more importantly, audits are not fun. And when audits,
What?
and rarely, audits sometimes happen during budget process, but very rarely are you in the throes of an audit, going through budget, and also in the midst of interim for the next set of financial statements. I don't understand how Dr. Sockeld and our team even know which years they're dealing with, because they've got feet in 3 different years. In the midst of working from home and everything else that we're doing, it was a very iterative process. We lowered our materiality, we increased our skepticism. Dr. Sockeld, but even more importantly, her team just stepped up and responded to everything that we asked for in as timely manner as that they could. And I just want to hats off to them.
Yeah. Thank you. I agree 100%. I'm sure Dr. Aguirre does, and Mr. Solis as well. And yes, I do understand what a juggling act it has been for them to have all these things going on. I think part of it is how our fiscal year is structured, starting so early when other school districts start later. It really compresses the time they have to do a lot of year-end activity right after and during a finalization of budget. So I understand that they were doing a lot, but certainly having 2 years in that process is really commendable, that they were able to to do all the work and get it to this point. So we want to thank them and recognize their hard work. And I think I did want to offer to the committee that they would agree that we would recommend that the board accept this audit with our full recommendation. Do I have anybody on the committee that would not agree for that? Mr. Torres?
Moved by Daniel Gutowski.
Okay, Daniel. Do I have a second?
I'll second.
Okay.
Solely.
And with the committee, is there anybody that would not agree with that on the committee? Okay.
Good.
So we're good with that. Now we can move to the next item, which is the Propo financial and performance audits. So Kevin, are you taking over, or is Dr. Sockeld, or?
We can, and we can pull those up. I, at a very high level, had referred to them earlier, but two of our deliverables that we were engaged to perform was one, the financial statement audit for the Propo general obligation bonds. So in essence, if we think back to the financial statements that we just presented, this is a part of one of the columns. So it's a significant piece of one of those columns, but this is the balance sheet and the income statement of just the Propo funds. So first and foremost, we have conducted our audit in accordance with generally accepted accounting or auditing standards, and we're prepared to issue our opinion. And again, it would be an unmodified opinion upon the financial statements. This emphasis of matter is required by the auditing standards. It's a much better emphasis of matter than the other two. It's just alerting the reader to understand what it is that they're reading, that this is just the Propo general obligation bond activity. It does not purport to be, nor is it Sweetwater Union High School. It is just the Propo. So good emphasis of matter to have, but it's just alerting the reader to kind of reminding them what it is that they're looking at. Very small balance sheet, very much focused upon the cash and investments, and then, but once cash is tested, really the focal point of our engagement is the income statement, if you will. Limited investment or limited income in the current year, no significant debt issuances. So our focal point is really upon the capital outlay expenditures, as well as the other SG&A that goes. SG&A being a poor word, the other expenditures that flow through the bond funds. So again, we've issued an unmodified opinion here. It is, and here's where I'm going to caution you guys and tell you my belief as an engagement partner, but it is being reviewed by the national office. I don't intend to issue any material weaknesses or significant deficiencies as it relates to the Propo funds, whether it be the controls that were in place within the accounting system or accounting department, as well as just as importantly, the how closely items are tracked as it relates to projects, etc. I don't believe that the control deficiencies permeated to the Bondo program. This is I wouldn't call it a bone of contention, but anytime you have something kind of, for lack of better words, at the high level and you have something below it, there is a natural presumption that those deficiencies flow down. I do not believe that's the case. We've prepared our draft to show that we have not, that we don't have exceptions here. But again, this is something that our national office would be looking at. So, and if they change my mind, Dr. Sockeld and her team will be the first to know. But again, from a the financial statements, clean opinion, and as of this point in time, no findings.
Thank you.
We also do the performance audit.
Yes.
And again, this is kind of as a general reminder, certain procedures here are required by state law. Some of them are more what I would view to be expanded procedures at the request of both the trustees as well as the bond oversight committee. But we have gone through each of the objectives that are listed on page 10 and 4 and determined or opined as to what our conclusion is on each one of those objectives. Again, there's a description of the program, and then it goes into the objectives, how we tested it, and what our conclusion was. So for each of the objectives, we had no findings with the exception of this first one. And again, this is, we were looking at the compliance with contracts and the compliance with the contract that we had an exception with was on the 5th contract. They were not able to provide information as it relates to the DVBE requirement as it relates to the Hilltop High School track and field. So you can see there that that was the one exception that we had within the performance audit. But each of the objectives walks through the objective, the procedures performed, and the conclusions that we reached as an external auditor.
All right. Thank you very much. Do you have any comments, Dr. Sacheld, before we have questions?
No comments.
All right. So do we have any questions from committee members or Mr. Solis? I hear none, so.
None from Jerome.
Okay. Mr.
None from
Gutowski?
Gutowski.
All right,
No
so
questions.
then I have no questions either. It's pretty straightforward. Thank you, Mr. Smith. Would I get a motion to also recommend the board accept these audits and approve the work?
Gutowski motions.
All right, do I have a second?
Yeah, I'll second. Solis?
All right, does anybody have an objection? Hearing none, I will make the recommendation to the Board of Trustees next Monday that they accept not just the financial audit, but the Propo financial audit and the Propo performance audit as well. Thank you all. Thank you. So our next item on this agenda is the engagement letters for the 2000. Well, I'll just let you take it, Dr. Sacheld.
So at our last meeting on August 17th, the CRO team provided some background on the scope of work related to 2019 audits. I know there was, I believe, a request or an inquiry on further information regarding that scope, or to provide another opportunity to discuss that as the team continues with their field work over the course of the next few months. So we brought it back to this meeting and to this agenda to provide that opportunity for further discussion if needed.
Let me clear something. You said 2019. Are you speaking about the 2019-20 audit? Actually, it's the last year just completed, right?
Correct.
So they're starting their work on that audit, and you're asking if committee members have any input on the scope that was outlined in the letters that were on our board agenda attachment. So, do I have any questions? Mr. Gutowski, I know you were interested in this information.
I thank you for including us for comment. In view of the financial situation and the uncertainties, I have no additional comment to the current scope of work.
All right, Mr. Torres.
I do.
All right.
I do have a question about this, and that is the scope of work. How are you going to deal with the COVID-19 funding variable? And what I'm talking about is the 2021 CARE Act coronavirus relief funding. The school district was awarded $26.5 million, and the spending period started in March 1st, 2020. So that would be in the 1920 fiscal year or school year. So going naturally through June 30th. And then by and large, the majority of those proceeds and the expenditure therefrom would be in the current fiscal year. But still, there would have been significant allocation of monies in 1920 and expenditure of those monies in 1920. And how is that going to be included in the scope of work of this audit?
Dr. Sacheld, would you like to comment?
Yes, Trustee Hall, and to the committee. So the CARES Act money, that particular funding source, is part of the governor's learning loss mitigation. That was included in the June adopted budget by the state. Those allocations, so 26 million is one of the three funding sources. It's actually the coronavirus relief fund.
Correct.
That allocation was only provided to school districts by the California Department of Education in early August. So as we were closing our books, That's not something that there have been any costs applied during the period of March to June. Because one of the contingencies of those monies is a learning continuity plan. That's being brought forward to the board later this month. There was a first read at the last board meeting, and then there's another read at the next board meeting for final adoption. And so those monies are contingent on what's also included in that plan. So for the 2019-20 fiscal year, there were no dollars expended against that resource. It'll be included going forward for July 1st going forward.
Okay, so then I can safely assume then, assuming that Crow is going to be hired for 2021, that in the scope of work for this current year, that the audit scope of work will include an evaluation or an audit of that CARES funding for the current school year, and that I won't be on the committee then, but prospectively, whoever is on the committee, they'll be presented that information. Okay, thank you very much.
All right, thank you.
I would like to add, Mr. Torres, is in terms of the CARES Act, so there's a couple I just want to clarify. So the CARES Act, there's the learning loss mitigation that was in the governor's budget, but there is another CARES Act funding that's part of the direct stimulus plan that was allocated to school districts in around, I want to say May timeframe. That's about $8.2 million. Now, of that amount, the district did expend about $600,000. That money, and that is going to be in the scope of what the Crow team will be reviewing as of the end of the year. But that's separate and apart than.
Oh, I'm sorry. Okay, no, thank you for the explanation. The reason why I'm bringing it up is, as you all know, is that there's been some expressed concern about the expenditure of the CARES Act funding, and I just want to make sure that that is included in the scope of work of our external auditors, and that information is provided then to the general public for their consumption. So I just want to make sure that that's all taken care of. All right, thank you so much.
So just to make, just for a follow-up question on that, Dr. Sockeld, if it's part of our general fund, wouldn't it be part of the audit? Regardless of whether it was a particular stream of funding, if it was coming to the district as part of our general fund operating, we would have it as part of our audit, correct?
It would be part of the general fund restricted. If
so
we receive the money in 20.
Right. That's general practice. That's not something that has to be added or is a special focus of it. That is just what happens when you get money as an educational institution, under the government of California. You're audited for your money, whatever the stream of funding is. It may be different in how it's handled and looked at as far as the federal compliance. Is that correct?
That is correct.
Right. So in that respect, maybe Kevin can say, maybe they haven't even talked about how they're going to do that. Would it be included under the federal, compliance pieces? Because normally that's Title I, special ed, and like those kinds of funds, right? Perkins, things like that.
So I'll try to give my most coherent answer that I possibly can.
Thank you.
So first and foremost, Trustee Hall, you are correct. It would be part of the general fund and it would be subject to all of the auditing procedures that we do from a financial statement perspective. It is considered to be subject to the federal single audit. So the uniform grants audit would apply.
Okay.
The sheer fact, if it's greater than 750,000 as of year end, I guarantee that it would then be a type A program and subject to auditing procedures. At the level that Dr. Sockeld mentioned at about 680 or 690, it would be considered a type B program. And to the extent that you have any low risk type A programs, it would most likely become a major fund. What is sad, and I can't give Mr. Torres a better answer as to how we will audit it, the feds have not decided how and what we will audit with respect yet.
They haven't written those guidelines yet, right?
They have not issued those guidelines. It is something that we as a firm are looking at on a daily basis and trying to get that guidance, one for us and two for our clients just as quick as possible. But it will be it will be a part of the Uniform Grants audit. Whether or not it is a focal point will depend upon funding and a variety of other measures. And it will also be subjected to the auditing procedures as it relates to the financial statements.
All right, thank you. That's really a great answer as well. So we appreciate it. Thank you. So we have no further recommendations on the scope of audit, correct, Mr. Torres?
Well, Dr. Salkel said that $600,000 of the CARES Funding Act was expended in 1920, so those will be accounted for then, right? And the scope of work. Okay.
Well, yes. I mean, they're a part of, we just explained it's part of this.
Well, if I may, Member Hall, is that my only concern is with regard to that. I know full well how the audits are done of federal funds and state funds and whatnot. What I'm trying to get at is that either as a note or whatnot, is that there be a little bit more of a focus, and it'll happen more in 2021 as opposed to the prior year, relative to those funding streams of the state and the federal, and a little bit more elaboration or illustration, a simple schedule, something that, again, can give the general public and all stakeholders some allay their concerns that, hey, this was fully accounted, reported, all good. That's my point.
All right. I'm not sure what to do with that. Without guidelines on what they're supposed to audit, we know it's going to be as part of the general audit. And we know that they're going to look at whether or not funds expended were in compliance with the regulations. So I don't know that there should be any additional notes to this letter of scope of audit, but I will bring your concern to the Board of Trustees, who will be voting on the audit scope and this letter and the engagement, I believe, on Monday.
Trustee Hall,
correct? Yes?
Trustee Hall, if you will. So I think what I'm hearing Mr. Torres tell me as the audit partner is that he would expect to see robust discussion within the MD&A, just kind of alerting readers at the point in time that the financial statements are reflected and the CARES Act funding is there, that it's adequately discussed in the product of the audit versus the engagement letter.
Exactly, Mr. Smith. That's exactly what I'm saying.
Right. Okay.
So I think he was giving me my risk assessment up front, and I appreciate it.
Well, thank you. So thank you very much. We'll leave it at that, and we'll make the recommendation. I will make the motion to recommend this, or I can accept the recommendation of this scope of audit and provide our recommendation to the Board of Trustees at their meeting that this committee, supports this scope. Do I have any objections to that?
None here.
All right. Somebody want to second it?
Solis, second.
All right, Mr. Solis. Thanks. Hearing no objections, we'll make that recommendation to the board. So thank you all from Crow. We really appreciate everything you've done. I know it's late for you, Kevin. I'm not sure where. I think Elizabeth's in California, though, right? So anyway, I hope you have a good evening. I hope that we appreciate the hard work and our continued that you're continuing the relationship with Sweetwater. Dr. Sokelt or Dr. Aguirre, would you like to say anything? Do you have any comments?
Just a general echo again. We appreciate the collaboration in order to move this work forward. It's critical, and I appreciate the progress that we're all making together.
Thank you.
All right.
Thank you.
Everyone have a nice evening and stay healthy and stay safe.
Thank you.
Bye.
Bye. All right. So our next item is the unaudited actuals for 2019-20. Dr. Sokeld.
Thank you, Trustee Hall. So Caroline is going to pull up the presentation that we shared at the board meeting on September 14th. Go ahead and start with that. We'll just go over a couple of the slides that are noted here. And we'll start with slide number 3. Because what you just, at this point in time in September, what you just saw with the 18-19, these are the financials. This is the reporting cycle that looks at the data that has come in from a revenue standpoint and expenditure standpoint at the end of June 30th of 2020. This is what we deem as being ready, audit ready to hand over to our auditors so that they can start their work. As we've shared previously, they have already commenced some of their field work over the summer, primarily with our schools, looking at their ASB accounts, looking at attendance, because we've spent the summer, the finance team, looking at all of what you hear us say accruals to ensure that we've captured the revenue or the expenditures for that reporting period, looking at any state apportionment numbers, federal apportionment numbers to ensure that we've got the appropriate revenues, looking at our local control funding formula calculator, all of those variables that go into closing that out for the fiscal year, and then looking at all our expenditures, ensuring that we've captured the invoices, any payroll costs, so that we close out the year with the best information that we have at that point to hand over to the auditors. So this is what is the final result, the final performance for the year. Typically our other reporting cycles are looking at projected budgets. It's always kind of that focus on budget during interims, during the end of the year when we bring forward the budget adoption which is considered the estimated actuals. So at this point, we're closing out the year. So we're going to provide that update here in a bit. And again, it's to comply with our statutory requirements. Per Education Code, we do need to bring forward this item to the board by September 15th so that we can deliver what's known as the Standardized Account Code Structure Report, the SACS report, to the County Office of Education, as well as then they remit it to the California Department of Education. So Caroline, you can go to slide 5. And what we provided here, similar to what the CROW team also had in their financials, is just providing a historical record of the last 5 years where the unaudited actual financial statements were at this point in time in September. Because what you can see looking at column E, the district certainly ended in a much more favorable position as it had in years past. A lot of it is attributed to the unique situation in which we're in with COVID and some of our school closures. But if we can go to the next slide, Carolina, slide 6. This goes into a little bit more detail and focusing on 1920 specifically. So when I was mentioning each of the reporting periods, and I'll do kind of just break out each of these each of the sections here, you can see that from a revenue standpoint, in that last column, column E, is our final result. You can see that we ended with $411 million in terms of revenues. When you look at that comparatively for each of our reporting cycles throughout the year, particularly our last reporting cycle, the estimated actuals in June, we were just came in a little bit favorable, a little over $1 million. But you can see we're holding pretty constant to that 410, 409, where things ended up. Most of that was result of us, again, closing the books, our state allocations as it relates to lotteries. Monies we got in the accrual from the state that came in a little bit higher by about a little over $300,000. Some of our other local income with interest and a few other things came a little bit higher than what we anticipated. So all in all, but a district this size, our numbers were pretty spot on, pretty close to our initial budget projections. So that a little over $1 million does help and contribute to the bottom line. Then if you go to the expenditure section, again, you can see that with our numbers, and again, these are a lot of the processes we've been putting in place over the last 2 years related to positions and ensuring, from a position control standpoint. You can see that our numbers from the certificated, classified, and employee benefits, when you compare that to column D, again, we were very spot on with a district this large in terms of our unrestricted budget. Our numbers were aligning pretty close to what we projected. Where you see some, in essence, one-time savings, again, attributed to primarily the closure, you see is our supplies. So our supplies, we originally had projected 6.2, came in at $4.7 million. That, along with our contracted services, we initially projected 26 million versus 22 million. A lot of the work that we do in June is we look at encumbrances. We look at what schools and departments have via purchase orders, because these encumbrances that they've put in place are their expected costs through the end of the fiscal year. So we use that information to align our budget projections. However, when we get to the end of the fiscal year, we look at those purchase orders, but we also compare it to the invoices that we have that go through June 30th. Sometimes if things aren't expended or some if not utilized, that's where you end up, this results in a positive or a savings at this point in time. So we went through a lot of those efforts in reviewing those invoices and those purchase orders. One of the other key points related to contracted services, that line item is where we also roll up our utility costs. Our utility costs came in about $1.6 million favorable, again, attributed to the school closures during the last quarter of the fiscal year primarily. So that had a positive impact. Again, as we move forward into our 2021 year, we're going to continue to evaluate our next budget cycle because at some point in time, there will be business as usual. So these one-time savings are, again, one-time in nature. And then if you look at the bottom line, too, is our contributions, that all in all, what the general fund contributes to other restricted resources also came a little bit more favorable. So, Caroline, you go to the next slide, please, slide 7. This just provides kind of that recap of those areas that I just touched upon, like the revenues, the lottery monies, where some of those savings, the one-time savings came about in books and supplies. One example, such as with fuel rolls into books and supplies line item or that category. So with not having transportation, with our buses not, transporting students during that last quarter, there was also some fuel savings in that regard. And then with that, we can go to the next slide, I think slide 8, Carolina. So when you take that information, again, this is a roll-up of those revenues and expenditures. So it does reflect a positive $19 million operating result. However, keep in mind that with that $19 million, then we have to earmark it for required reserves. So this did provide the district the opportunity to restore the 2% education code requirement of economic uncertainties. As you recall, in 2017, looking at those historical financials, that economic uncertainties was not available at that point. So we were able to set aside that for the fiscal year end of $9.2 million. One thing I would just like to note with economic uncertainties, although it's a state requirement of 2%, that is just a small portion that is attributed. If you looked at our payroll, the district's payroll can range from $22 million to $25 million on a monthly basis. And so $9.2 million is just a portion of that, not to its entirety. The other line item that we were able to restore based on that operating outcome was a qualified zone academy bond. That is an obligation that went into effect in 2005 and was in the ending fund balance back in 2017-18 and needs to be part of the reserve because that particular obligation, it matures on September 2021. So we needed to have that earmarked. All the others, revolving cash, the stores, the prepaids, those are all required set-asides based on what our numbers are at. So those are factored in there. So truly, aside from those reservations, what was really left or unassigned was only $3.7 million. With that, what we've noted here, this provides an opportunity for the board to evaluate those dollars, again, one-time in nature, that perhaps that can be revisited towards textbook adoptions that were put on hold given the district's financial position a few years ago. There's also been conversation about ethnic studies, so there might be an opportunity to utilize these one-time reserves for those possible investments in the near future. Again, but that's where it's earmarked as such as in this category. And then if we go to the next section, slide 10. So that was on the unrestricted side of things. So you'll also see a kind of a common theme as it relates to our restricted side of the general fund. That is, and what we've pulled out here on this particular slide are the particular resources where the federal government and some other granting agencies provided the school district extensions because of not having school in session for that last quarter of the year. Some of the dollars were not going to be spent. And so as you can see, our title monies, our Title I as an example, ended the year with $2.3 million. But the federal government put in a waiver in place because the way that Title I is set up, you can only transfer or carry over, I should say, 15% of your overall allocation. This amount is certainly higher than that, but now the federal government waived that, and plus they extended that those dollars could be utilized through expended through September of 2021. So it granted an 18-month extension period. And you can see that with some of these other title resources. Another one was our after-school program. There we do receive some money from the state, which is known as our After-School Education and Safety Grant, or ACES grant. And then there's also the federal government grant, which is our assets. These two an extension was granted. However, that was through December of 2020. So our state and federal office is working very closely with our schools to ensure that they utilize those monies before that expiration date. And then the same is true with any of our other career technical education programs, which is our Partnership Academy grant. That had a waiver through August, and then our CTIG program through December. So again, you can see there's various deadlines, but we're very cognizant of this, working very closely with department staff and principals and others to ensure that those dollars get utilized within that time frame. So again, this is just to note that because it's on the restricted side of things. The next few slides go through our other funds that we have report under the SACS reporting. But what I'd like to then go to is the one of the last few slides, Caroline, it's slide 27. Because in essence, now we've provided this information, similar to what you just heard with the 2018-19 audit. Now we're providing the 19-20 audit. We'll get ourselves back on track. We intend to bring that forward to this committee in January. Typically, the education code indicates that our audits are to be provided by December 15th. However, the governor and the state legislature modified the education code for this one time to provide school districts and audit firms a little bit of flexibility in terms of preparing the audits and so forth through March 31st. That December 15th deadline was extended through March 31st. In working with the CRO team, we do not believe we'll have that will be necessary through March 31st. We intend to bring that forward to this committee and then the board in January for the 2019-20 year. And so, again, we've already commenced a lot of that work, as I've mentioned before. And so from now through the December timeframe, we're going to be focused. We've been already providing a lot of schedules to the CRO team for 19-20 for them to commence that work. And so I think that, you know, so it's a summary, but if there are any questions.
Thank you, Dr. Salkeld. We appreciate the presentation, and it is good news in many ways. So let's hear from the committee. Do you have any questions? Mr. Gutowski or Mr. Torres?
None for me. This is Jerome.
All right. Mr. Gutowski? I don't hear him. Oh, are you frozen? Mr. Gutowski, do you have any questions on this unaudited actual presentation? I don't hear him, so we'll move on. Thank you very much, Dr. Sawkeld, for that presentation. The next item on our agenda is the adoption of our minutes from the July 20th and the August 17th meetings. Have you all had an opportunity to review the minutes provided in the agenda packet?
This is Member Torres. I actually would like to raise an issue or a couple issues or suggestions. Is that on the meeting minutes, because I'm more used to either an action minutes or one that's more expository. And these minutes are a little bit of both, but on July 20th, under member comments, there was no mention regarding the suggestion by me to hire an additional internal auditor that was supported by you, Member Hall, and Member Solis. In the July meeting, there's no reference to that in the minutes. And subsequently, in August 17th, there's no mention regarding the discussion that we had concerning the hiring of the internal auditor, which was reported out by Member Hall and Superintendent Aguirre about how there would not be a new additional internal auditor hire. Now, Member Hall in August 17th informed us that she, in fact, did present that matter at a board meeting, which, I'm glad to hear that. But since this is a historical document, and since those discussions were held in video conference, it was actually recorded in a video conference for those two meetings, I'd like to have included in the minutes the reference to those two discussions in the appropriate meetings of July 20th and August 17th. You with me?
Right.
I think we can
agree. I think we can agree to have Carolina go back and amend or listen to the minutes again. I'm not sure that I firmly said we weren't hiring. I said that was, our first. I did take that recommendation and gave it to the board when I reported our regular meeting following the meeting where you brought that up. And when I stated in telling you that at our subsequent audit subcommittee meeting, what I told you was that our focus was first on classroom and, that we couldn't just go out and add positions. It wasn't that we're never going to, have an additional, that's not it's not for me to say as one single board member whether or not that happens. That's a discussion that the board would have and would consider budgeting a position. We would run it through, various committees to get their input on that. It's not just to go out and hire. I think you can understand that as well.
Oh, absolutely, Member Hall.
That was my whole intent in the comment I made at that committee meeting.
No, absolutely, and I appreciate that. No, my only point is that reference to the discussions be reflected in the July and August meetings to that effect on this particular item. There's no reference whatsoever in the minutes.
Right.
And I think And I think that it is important. So
I agree. It's important to note in the minutes. So Carolina, perhaps we should bring these back at our next subcommittee meeting, and you can make those amendments, and that way we won't have to discuss this evening, exactly what those changes are, but you can make those changes and that coincide with what your notes have and what the recordings have, and bring them back for approval at our next committee meeting. Is that agreeable, Mr. Torres?
thank you, Member Hall.
Thank you. I appreciate you bringing it up. Is there any other? So we'll bring back this to our next meeting with amendments as requested by Board Member Torres. And the next item we have is our subcommittee calendar. Dr. Sawkill.
Thank you, Trustee Hall. So yes, we've provided an update to the calendar to reflect the meeting with Crow in January for the 2019-20 audit. I think our next meeting, as Carolina brings that up, so our next meeting would be in late November, where they would be providing a status update on their work that they've conducted thus far. And that we would also have our internal audit team provide their quarterly, in essence, update on any items they would have, if their reviews, as well as the ongoing fraud hotline update. And then if you see scrolling down to the next, you can see then we've added the January meeting agenda. January 19th. That's been the only addition, and we'd have the one in March for the calendar or for the fiscal year. I'm going to provide it to the committee for any feedback or if there are any questions.
All right. Is there any feedback? Are you gentlemen available? I understand that they tentatively reached out and confirmed the dates that for January or for November and January. Is that correct?
Correct. Those are dates that we were provided by the Crow team. Correct.
Right. So is there any questions or remarks from the committee?
None by me.
Good. The dates are good.
All right. Mr. Gutowski, you fine? I don't think he can unmute very easily. All right, so we'll accept the calendar and set those dates for our subsequent meetings. If you have any other items that you wanted that are clear on this calendar, please submit them to Carolina and Dr. Sawkill for discussion and for consideration. And with that, we'll move on to open remarks from the committee. Do you have anything to say, Mr. Torres, as we conclude our meeting this evening?
None. Thank you for the meeting, and especially Dr. Sawkill and her team. And then thank you for the notation about Carolina as to any prospective agenda items in the next meeting. So I'll send her an email and copy everybody.
Thank you. Mr. Gutowski, do you have any closing remarks you'd like to share? I don't think he does. Dr. Aguirre? No? Mr.
I'm
Solis?
good. Thank you.
Thank you. Mr. Solis?
Yeah, I just wanted to say thank you to Dr. Sawkill and the staff for all the work that they've put in, and we really appreciate all that. And also to our committee members for their engagement and their questions. We really appreciate that. So thank you very much.
Right, we do appreciate everyone's hard work. So with that, this meeting is adjourned. Thank you very much.